Hey guys, it's Matt. Let's talk about the different major trading sessions, Asia, London, and New York, because each one has its own personality. Trading Asia the way you trade New York is like using a highway strategy on a parking lot. They're not the same kind of market. One of the biggest mistakes traders make is assuming the market behaves the same way throughout the entire trading day. It doesn't. The session you're trading can completely change the character of price action. Asia is typically more range bound. Volume tends to be lower, movement can be tighter, and the market often spends time establishing a range rather than producing a major directional move. That's where traders get into trouble. They'll see a move during Asia and assume it's the beginning of a trend, only to discover that they're actually trading directly into the chop that session is known for. Think of the Asian session as potentially building the framework for what's coming next. The highs and lows established during this period can become important reference points for the London and New York sessions. Then London arrives, and the character of the market often changes. This is where that Asian range may be tested, swept, or broken. London often provides the first meaningful directional push of the trading day, with more participation and increased volatility compared with the quieter Asian sessions. It's also a session where you'll frequently see liquidity sweeps. Those Asian highs and lows can become obvious targets as London begins moving through the range. Then New York comes in, and things can change again. New York will often extend what London started, or completely reverse it. The New York Open is particularly important because participation increases significantly. This is where traders need to be prepared for faster movement and potentially more aggressive price action. And when London and New York overlap, you've got some of the highest participation of the entire trading day. That's a very different environment from the quieter Asian sessions. So don't use exactly the same expectations and trading behavior in every session. A setup that makes sense during New York may not make sense during Asia. Does that make sense? Instead, ask yourself which session you're actually trading and what that session typically does. Is it building a range, testing liquidity, expanding, reversing? That's the key idea. You're looking at the same instrument on the same chart, but the behavior can be completely different depending on when you're trading it. Asia, London, and New York aren't interchangeable. Learn the personality of each session. Understand where liquidity is likely to sit, and stop treating every move like it's the beginning of a trend. All right, guys? Trade well. Ask any questions you like.